what is a VC looking for, I guess? They don't like risk. Contrary to the perception that they're in the business of backing risk, they're not. So whatever you can do to reduce the level of risk in your deal, whether it's technical risk, market risk, or any other form of risk, say management team risk, do it, because that's going to work in your favour. Often playing into that point is pedigree, so they'll look at the pedigree of a deal. What is the background, say, of this professor, if it's a professor? What level of cred do they have in the field? Published articles, all sorts of other stuff sitting around that. So where should I start? Don't start writing. That's my first and biggest tip. And it's hard to stop people doing that, I must say, after years of trying. And because the problem with when you do write is everything seems more locked in than probably what it really is, and becomes a lot harder to change. So what we try to do is work at a conceptual level before we get to putting all the detail on the paper. And what that does is reduce the number of iterations of the actual information memorandum itself. It's time consuming to you write a page, 2 pages on your marketing approach. And if something else changes within the venture, say your business, your value proposition or something like that, then you have to go back and rechange it again. So try and map it out at a conceptual level and structure it to fit your potential investor before you start documenting, and we'll go through some tools to do that in a minute. So this is the process I wanted to go through in a bit more detail. Just check how we're going for time. We want to select the appropriate source of capital for our opportunity. Use the venture diamond to select the best business model, prepare our documentation, and then build the buzz. And in VC world, buzz is a big thing. So don't underestimate the power of buzz. And I'll talk more about that, but you see some crazy deals happening because of buzz, and it's just the momentum that builds around the deal. So I think this is a really interesting idea to open your mind to say, all right, I've got this thing and this is how I'm planning to do it. If you give the same idea to 10 different entrepreneurs, every one of them, and you said, all right, go and build it, they would all build 10 entirely different things. And it's not to say any one of them is right or any one of them is wrong, but wouldn't it be great if you could think about what those 10 other things might be before you sort of launch down one of them, and make your own assessment as to that. So as part of that, we've developed this venture diamond model, which says what this is trying to do is overlay our business model, I guess as outlined in the previous slide, with the requirements of the investment community. So is the market big enough? Do we own the customer? What's our position in the value chain? Do we own a very strong pinch point? Do we solve a problem that other people have difficulty in solving? And how sustainable is that position? And what's our intellectual property position? How long has that got to run, etc.? There are milestones, and every business that raises capital lives from month to month. You think that all your problems are solved. We've got all this, we've done the deal. This big VC is going to give us $3 million over the next 2 years. Well, that's great, but what they're going to do is stage it in milestones, and they're going to say, right, if the product's not developed in the next 6 months, you don't get your next tranche. And every tranche is invested based on the success of the previous tranche, and you need to keep meeting those milestones to keep the money flowing through. So it's a very high pressure cooker environment within the venture because of some of these rules. You're going to get diluted in the first place. Obviously, you know that. You're going to give away some of your equity. 6 to 12 months of pounding the pavement. Deals don't happen fast. Doesn't matter how good they are. It's going to take you 6 to 12 months unless you already know a friendly angel or can raise money from family, friends or fools. Do you want to take on another board member and lose an element of control? Some people, that doesn't bother them. A lot of founders are super passionate about their concept and want to sort of retain all control.